Hey everybody, welcome back to the channel. Just want to go over the ICT Silver Bullet Hour from 10 a.m. to 11 a.m. Eastern Standard Time on June 5th. This is the S&P 500. So let's get started. Let's see what we see right now. We're right off. These purple lines are the new week opening gap this last weekend. This is the dotted blue line is the midnight open. And let's just see what we see as we play through this. Okay, so right now, right there, we see short-term high being cleared, liquidity being taken, and price coming back down. Let's see what happens here. See if we get any kind of imbalances. We don't. The price is not giving us anything right here. Not giving us nothing to work with. Okay, now your target right now is so far as this when you were up here. You know, this is the swing low that took out the swing high. That was a catalyst, right? So this would be the market structure shift. That was your low hanging fruit. So we haven't got anything, and we're already beyond that. So where's our next draw? So let's look back more over here. Our draw would be, you know, these right here, these relatively equal lows right here. And then you have basically this dotted blue line, midnight open right there. That'd be our two draws of liquidity. So we're looking for a pullback of some sort and something up here. So right now we're not getting it. So we'll see how price reacts. If it takes out this down here, and that's our main draw on liquidity, I'm not looking for a sell, so I gotta have more price action tell me what's going on here. And the other thing is this new week opening gaps. That's kind of usually a roadblock on price action, and it likes to bounce off of it. So if we do get a bounce off here, I'd be looking to take out these highs versus coming down further. Okay, we take out this short-term low here. That gets cleared. So now we got that swing low is cleared. That took out the swing high. Now it's cleared. So now we're basically at our draw on liquidity right there, and we're at the new week opening gaps. Now, there are more draws on liquidity below us. Yes, I'm sure there are. But right now, I'm not really liking it. It's kind of like a seek and destroy kind of thing. Come down here, take these out right here with this. Come out, take this out. Now take this out. So, you know, I need to see a little bit more price action. See what's going on. So we take out that sell side liquidity right there. It's now taken out. So that is now cleared. See what price does. Okay, still doesn't give us anything. Nothing to the upside. So like we took out liquidity here. If this was a fair value gap here, we could enter long and target up here, but we don't get anything. So we're still neutral at this point. We can go either way on this price action. You gotta let it show us. Now it looks like we're going lower. Maybe if this forms a fair value gap, we'll go lower. See if we can frame it that way, and we don't get it again. So we do get a volume imbalance right there, and then another volume imbalance. So you got this volume imbalance right here. See what happens with that. Gets filled in. Price is not wanting to go much lower right now. This is the short-term low that you want to see broken if we're going to keep going lower. This is the swing high I'd want to see get taken out if we're going to go higher right here. Got relatively equal highs right here, so I'd like to see some of that broken to decide for us which way we're going to go here. Okay, so now we got 3 in a row that are right here. So 3 relatively equal lows, or highs rather. You're kind of playing around on that, bouncing on that new week opening gap right there. Okay, well, that's a nice candle. And it does break this right here. So that would be, these relatively equal highs are broken, but also this one right here is broke. Okay, so depending on this next candle, if this next candle comes all the way in and closes in, we don't get a fair value gap, still can't go high, can't go higher. Price right now is failing to break lower, and it took out these highs. If it immediately shoots back down, cancels out all ideas of going higher. If we get a fair value gap, we did take liquidity over here. Now we took broke structure here. So let's see what we get on the very next candle. Okay, so we do get a fair value gap right there. If we trades back in it, I'll take that trade. I'll go long. And we would have been triggered in right there. There's our 2-to-1, our 4, risk 4, because we got to go below this candle. One tick below. 2 would be right here, which would be targeting these highs or this candle here, maybe consequent encroachment. So right now this is 8. We would have gone 10. We would be right, basically, right at this short-term high almost. Right there. So there's our, let's go back to 8. Let's go 2-to-1 here. Alright, let's see what happens here. Okay, using that same fair value gap, and no candle body is closing. No candle body is closing below it. They're respecting it. You see that? See how that candle right there is respecting that fair value gap? Let me pull this off real quick. You see that right there? So wicks are doing the damage, but you could have entered there, there, and there. There's 3 entries right there. Well, that one breached it, but that would have been a 4th entry. Still, it's not past medium, the mid-range of the fair value gap, not consequent encroachment, so we're still fine. That one, oh, okay, the wicks to the damage, body closed above, so we're fine. Okay, and that one right there, again, wick does the damage, but now the body is closed above. So see that? That's 6 times it entered this fair value gap and still respecting it. I feel pretty confident about that right there with 6 wicks going in that range and not closing below it. I feel good about it. So let's throw this back on there to see what we're targeting here. Let's see what happens here. I'm liking that. That's a good one right there. Okay, at this point right now, our stop would have been at broke even. Okay, I'll leave it back here. We would have already taken partials. If we had more than one contract, we would have taken partial off at 60%. Guarantee that's over 60%. So now we've made some money, we've pocketed some, and we're a risk-free trade. So now if it takes us out and we break even, we still made some money. If we hit our TP, we made the rest of our money. So this is a good trade. And right there would have taken it out. It should have taken you out right there. Let's see where it would have taken you out. If that didn't take you out with the spread, let's see if you get taken out right there. Okay, so you get out right there either way. So if that didn't take you out, that did, and you are still, because you would have moved your stop to break even, so you still wouldn't have been taken out of break even. You still would hit your TP. All right, so that's your Silver Bullet hour for June 5th.